Hello, and welcome to episode 6 of the US Market Open. My name is Rufas Kamau, market analyst with FX Pesa. I would like to begin with a mic test, so you can hear me clearly. Kindly type hi on the live chat, and I'll be responding to any questions from the same. So if you have any questions or suggestions that you want us to check quickly, then you can suggest there, then we can make some good progress. All right, so let's proceed. So in today's session, we'll be focusing on a number of things. One, we look at a couple of charts, beginning with the dollar index. Right from these, we look at the major currency pairs, also focus on a couple of indices, commodities, and see what we have. So key focus will be on the important price levels. And once we cover the important price levels, then you're able to narrow down potential entry and also exit points, and also the fundamentals that are currently affecting the markets. So let's begin by noticing that the dollar index has been very strong. So you can see the strong bullish momentum. So started here on mid of this week, and then last week, very strong bullish momentum, followed by a continuation this week. So a very interesting price level has been reached by the dollar index. And this is 109.113. So today we managed to test the same place. The price seems to be rejecting that price level. So immediately after we hit that price level, price was rejected, went back down, and since then we have had a series of candlesticks that are attempting to breach the same level. So for the last 6 hours, the market has just been attempting to break one simple level that was last seen some time back, and this was on 14th of July this year. So a very interesting price point. So if the dollar index manages to breach this level, then it means that we continue with the same theme of dollar strength. But then if it rejects this level, then we might see a breather where the dollar takes a step back, weakens for a while, and this could bring some relief into other assets in the market. So that's a very interesting price level to observe. So if the dollar index manages to break this level, then we could be seeing some much stronger dollar and also weaker other currencies. So that's one of the things to consider in the market today. So having this in mind, if you look at other asset classes, for instance, if you look at the pound USD, then it has had a very direct correlation. In this case, it's an opposite correlation. So as the dollar index goes up, then the pound USD has been going down. So you can see from the mid of this particular week, goes down, pound keeps on losing for an entire week, then this other week continues pushing down. So at the same time, it's also rejecting a major support level. So if you look at these creatively, you will notice that there is a very strong bottom here. So this was acting as support some time back. So a similar date, this is the 14th of July. Now you can see what has been happening on the forward chart. We have a very strong candlestick indicating a rejection of lower prices. It's a pin bar type of candlesticks, indicating a potential reversal in price. So we will be following further on this one to see whether the pound continues losing against the dollar. And this might be as a result of what we have seen in the dollar index. So if the dollar index cruises through this level, then there's that potential that the pound USD might also find itself in a similar story where it could be losing further against the US dollar. So key thing to focus on is that on the long run, there seems to be an existing trend line happening to represent a very strong resistance level, and also on the support level, there is also an existing trend line that seems to be followed by these markets. So if you try and connect as many points as possible, I'm talking about this low, whereas this low, and then this other low, then you can always extrapolate on your chart, and you can try to project where the market might be headed next. So an interesting perspective is that pound would continue losing against the dollar. And if it does so, then interest area would be somewhere around 1.4923 or even 1.50. Sorry, 1.150, not 1.150. So a very interesting data point here. So if price manages to cross through this support and breaks the support, then we could see a much stronger movement towards the lower side. And this would be based on whether the dollar continues to be dominant in the market or not. If it manages to bounce from here, then the focus would be on the upper trend line. So that's a very interesting area to be focusing on, whether the market respects the support and starts going up, or whether it just cruises through that support level and keeps going down according to the prevailing trend that started 2 weeks ago. So a similar story can be observed with the EURUSD. So if you go to EURUSD, I'll try and clean my chart here. And then you check on the 4-hour chart. It's the same thing. So it seems like the dollar dominance is what is driving the markets today. So look at these very strong bearish momentum, long-term trend line happening there. Another trend line happening on the lower side. So it seems like the euro is attempting to close down lower. And if this happens, then there's that potential or that expectation, and it could continue pushing lower and get to a completely new low. So remember, major price level for the EURUSD was the parity level. So a lot of investors are watching the parity level. So the parity level is the area where the euro was trading 1-to-1 to the dollar. So if I adjust here to 1.00, then this is the parity level. So some time back, and I'm talking about the 12th of July, also on this other day, this was on the 14th of July, the EURUSD attempted to break, eventually broke on 14th before finding a very strong support and rallied for 4 straight weeks, headed towards the upper trend line. So since hitting this level, you can see the last 2 weeks has been strongly bearish. Dollar strengthening against the euro, kept pushing down. So we had a major test happening here yesterday. So yesterday, this is the day we were testing the parity level. A very strong breakout towards the lower side, and it kept pushing down. So right now, we are looking at a market where the dollar is significantly stronger than the euro. And this kind of a trend would be expected to continue. So some further downside momentum, maybe even towards the lower trend line. So around this area seems to be a major support level, 0.97972. So we would see some further downside, and also this is dependent on whether the dollar remains very strong. Then we could see dollar strengthening against the euro and pushing all the way down to 0.972. So if this doesn't happen, then the forecast goes back to towards the upper trend line. So it's quite a common theme. If you look at USDJPY, it's the same thing. Mid of this week goes up, then last week, and then this week goes higher, except that for Japanese yen, it hasn't hit resistance yet. So for pound and the euro, we already hit support. Since USDJPY is moving in the opposite direction, hasn't hit the previous high yet. So one key thing to notice is that the Japanese yen remains a particularly weak currency as a result of the monetary policy practiced by the Bank of Japan. So in this case, if you were to zoom out and notice what has been happening in this particular market, a very strong rally by the dollar, followed by some pullback that lasted about 3 or 4 weeks. And then another rally that went all the way up, another 3 or 4 weeks pullback down, then up 1 week down, and then up. So it seems like a market that is persistently pushing higher, and we could continue seeing this particular theme play out. So if you look at this particular trend and what you are seeing on the 1-hour chart, then it's clear. You can already see that the market is breaking higher highs and forming even stronger trend lines. So if I were to connect this low with this low, then in the most recent past, the market seems to be pushing towards this area here. So this is strongly indicative of a much stronger US dollar against the Japanese yen. We have not yet hit the previous high. So a key focus area would be the 139.351, which seems to be the high that we experienced some time back on the 14th of July, which seems to be a very popular date among all these other assets. So A strong momentum here could be expected to continue with the dollar strength, and their expectation is that the price would be headed all the way up towards this area here. So if this doesn't happen, for instance, in this particular pattern in the USDJPY pair, then we'll be looking at a much more recent high here. So the high is around 135.491. So if the market was to pull back down, then the expectation would be focusing on this, because it seems to be a major resistance level, which also acted as resistance here. So it could be the support that the market focuses on if it happens to change direction and start moving downwards. So a very interesting point to observe in the charts. So the most interesting chart for today is the oil markets. So oil markets seems to have changed direction and started to move towards the upper direction. So if we use the 4-hour chart here, then we zoom our chart, then we draw a longer term trend line extending all the way back to a high that we saw sometime back in June, then you notice that the market is clearly breaking the upper trend line. And this is very significant since it may represent an opportunity to go for a bullish trend. So remember, as we continue with the session, you should always know that this does not constitute investment advice. You should practice risk management at all times and do your own research. So this is highly educative, only for educational purposes. So another key thing to notice is that on this particular movement towards the lower side, this started out as a channel, but then over time, the lows started getting higher. So if you compare this low with this low and this other low, then it seems like the market entered into what looks like a falling wedge pattern. So in a falling wedge pattern, you find that two trend lines are facing downwards, but in this case, they are approaching each other, forming what looks like a triangle. So if I was to zoom this out and then shape out the triangle here, then it would be easy for anyone to identify this as a triangle. So it seems like we have a breakout here towards the upper side, and the breakout basically implies bullish momentum in this chart. So bullish momentum might be indicative of a reversal of the trend, a market that was significantly unable to form lower lows. So at some point, we are expecting to start seeing higher highs. So a very short-term area to target would be the previous high on 2 weeks ago here. So if oil continues on this persisted direction, then 94.256 might be a nice target. But then if this particular kind of movement continues, then there is also another target here. So it's a high that we saw some time back, and this would be an expectation was going towards the end of the week, and this is the 100.793, or simply the $100 level. So if oil rallies back up, then you could see it go all the way up to 100, and this might represent a very nice opportunity to benefit from the rising oil prices. So there is a lot of sentiment concerning oil, especially in Europe, where both oil and gas prices have been going up over the past week, and we might be expecting them to go a little bit higher based on the supply side issues. So there's a lot of supply side issues, especially with the supply of oil from Russia. At the same time, the OPEC Plus countries are still adamant. They are not looking to expand output. Perhaps they could even reduce the output in the market, keep enjoying the high prices they've been getting over the past couple of months. So higher oil prices tend to be very beneficial for the OPEC countries since they get more revenues for their oil, but then it's also very negative for the economies since higher energy prices are causing inflation. So this is a very strong concern to be worried about. So if energy continues rising, then it could push inflation higher, and then it could have an angle on how the central banks respond to the high inflation rates, especially the US, the UK, and the EU. So if the European Union decides to, let's say, the ECB or the European Central Bank decides to hike rates, then in that case, it would have another effect on the stock market and also a sequence of other effects to individual investments. So key focus on oil prices because they might be a particular topic going into the news that we're expecting later in the week, that is on Thursday, where we'll be focusing on the Jackson Hole's Symposium. So on the Jackson Hole Symposium, a lot of our central bank governors will be meeting, among other economists. They'll be discussing policy and how they are responding to the current economic conditions. And investors will be following this information to look at hints about policy. And these hints might help advise them on where to allocate their investments. So very interesting week we have here. So a quick look on the economic calendar. Just a moment. So here's the economic calendar, and this is what we are seeing. So since early morning, we have some major news happening around economic production. So in the Eurozone, major news was the services as well as manufacturing PMI, which for manufacturing was slightly lower than 50.0, which basically indicates a contraction in manufacturing in the Eurozone, while services were slightly higher than the 50.0. Indicating, yes, expansion, but compared with the previous period, it was a drop. So it means the curve is probably headed towards the contraction side. So you can already see the curve from the last 4 months. It seems to be going down and down. And if it goes below 50, then it's clearly indicative of a contraction. So a similar thing was being experienced in the UK. So at 11:30 a.m., we saw the flash manufacturing PMI. So the reading for manufacturing was lower than 50, indicating a contraction in UK manufacturing, while services maintained at 52.5 compared to 52.6 in the previous month. So it's also indicative of an economy that is expanding slightly, but a little bit edged towards contraction. So 4:45 p.m., we will be expecting more news from the US. This is a flash services PMI and also manufacturing PMI. If you look at the expectation, we are expecting more contraction in services and also a slight expansion in manufacturing. So those are the key data points to focus on today. Later on, we'll be looking at the home sales. So if the home sales keep on reducing, then it would be indicative of a weakening real estate market, which would confirm to a lot of investors that we are indeed in a recession. So Richmond Manufacturing Index is also a key data point that we'll be focusing on later in the day. So going towards tomorrow, there will be durable goods orders, very important data point showing how the American consumer is faring. Later on, we'll be looking at the crude oil inventories, and the major news for the week will be starting from Thursday, where we focus on the preliminary GDP quarter over quarter, and also the Jackson Hole Symposium, starting on Thursday, running all day. It will be going for 3 days, so we'll have the same symposium running on Friday and also on Saturday. So during the symposium, there will be a lot of speeches from major central bank governors. So for the US, the Fed Chair, Jerome Powell, will be speaking at 5 p.m. on Friday. So very interesting week where we'll be focusing on this. So going towards the interest rate side, you can already see that the New Zealand economy has the highest interest rates. It has been a common feature for the past, so it's not something that is new. So New Zealand and Australia tends to have very high interest rates, where bigger economies have lower interest rates. So central banks have been competing, trying to outpace each other in hiking interest rates in order to control their local inflation. So for Canada, their current interest rates stand at 2.5%, US 2.5%, Australia 1.85%, UK 1.75%, the Eurozone at 0.50%, Japan negative 0.10%, while Switzerland has a negative 0.25%. So key thing to notice is among the weakest currencies is the Japanese yen, as a result of the stimulus packages they implementing in the economy and also the low interest rates, which is a very strong breeding ground for inflation. So this, coupled with the amount of printing that has been happening, is continuously weakening the JPY. So the euro also in the previous meeting promised to be doing a special program to support the smaller economies, and this program basically involves further stimulus, which could increase the supply of the euro and weaken the euro further. So fundamentally, the euro and the JPY seems like nice targets when you're looking to pair a stronger currency against a weaker currency. So that being said, I'll be checking quickly to see if there's any questions for you guys, and then see how I can respond to that. So a quick one from Dennis. Take a look at the euro pound. Yes, definitely I'm looking at that. So this is very informative. Since you started these charts, I've really got to know more about trading in futures and forex. Thanks. Thank you, David, and hello, Tony. Welcome to the session. So the request is on euro pound. So quickly, let's open that chart. So here is what you have on the euro pound. So it seems like a market that is making some good swings, upwards, downwards over time. So sometimes I try to do this from bottom down kind of analysis. So I may start with this and focus on this as a resistance from this high to this high. And also I look at a wider view. So here I can, let's say, compare these lows here with the highs that we have here. And it seems like the market has been following this path for quite a period now. And this is on the 4-hour chart. So remember, whenever there is patterns in the market, these patterns can repeat themselves over time. And also there can be patterns within patterns. So for instance, if you look right here from the lower trend line towards the upper trend line, we have been seeing a consistent theme of highs. So from this high, market keeps on finding resistance around this area, which is a clear ceiling that the market has been finding. And also on the lower side, we have had a clear floor or a support level that has been playing out around this area. So since around 29th of July, the swings from the lower side to the upper side keeps testing the upper side, it goes back down to the lower side, upper side, lower side, and now this is what we have. So now that we're on the 1-hour chart, it seems like the euro is attempting to strengthen against the pound, but the long upper tails are saying otherwise. So if you look at the tails here, they are all indicating rejection of higher prices. So it's probably even premature the market to start bouncing from here. So an interesting price level would be this area here along the lower trend line. So if the price was to somehow drop and get to this area here, then it would be a premium area to look for signs of bullish entry. And perhaps if you are managed to capture a bullish engulfing like this one, maybe go for a buy trade. So I would be focusing on this area here as a major support level, 0.84106. Notice it was also a support in these two areas here. So this very reinforces the idea that you can be patient, wait for the price to get here in order to look for a potential entry, maybe towards the upper side or towards the lower side, depending on what price presents at that price level. So very interesting area to watch here. So still checking just to see if there is any other question. Emperor Traders, hello and welcome to the session. Constance, hello and welcome to the session. So now that there is no other question, let's proceed. So we have looked at the major currency pairs. We have looked at oil, we have looked at the dollar index. So I believe what's missing is now the the indices. So I'll be beginning with one of them, and this is the US 30, or what we call the Dow Jones. So the Dow Jones has been on a bearish trend, and this is right from the beginning of the year. So if I zoom out my chart, you'll notice that there was a new high here happening somewhere around the 4th of January this year. But since then, what is the swing? So as the lower side up, swing down, swing up, swing down, swing up, swing down, and down. Then we have the most recent swing here. So let's try and make these a little bit more accurate. So from this high here, going down to the next high, and then the current high that we have here. So it seems like the market had broken the high towards the upper side for quite a period of time, and I'm talking about last week. So market opened here, broke the high for a period of time, and then immediately after that, started dropping towards the lower side, indicating some very strong bearish momentum. And this is correlated. So if you look at other markets, they kind of represent similar information. So you can already see there was some form of selling here acting as the resistance, and the support seemed to be strengthening right from the base where it was less sideways. So notice that sometimes the trend lines can change. So from this bottom to this bottom going this way, then somehow the highs getting higher. Sorry, the lows start getting higher even strongly, leading to this kind of momentum, gets to the upper trend line, which is a longer term trend line. Then from there, the market starts changing direction. So we have seen some very strong momentum, and this is for the last 2 weeks. Mid last week and also this week, very strong bearish momentum, indicating that the equities are weakening across the board. So this is a similar kind of scenario for the US 500, or what we call the NASDAQ 500. So, sorry, not NASDAQ, but the S&P 500. So, times get this report done. So, this is what we have here, a market that was on a very, very strong bullish run. So for 1, 2, 3, 4, and 5 weeks, the market was strongly going up. Didn't quite get the resistance, but started changing direction immediately. So on the 4-hour chart is how it looks like. So we had a very nice break here. Immediately after the break of the trend line, you can see the strong acceleration towards the lower side, indicating that the trend we have changed, and we could be looking at further downward pressure in the S&P 500. So it's the same case for the US Tech 100. So if you look at the Tech 100, you zoom out, you will notice that the trend line was not respected. So the market had broken the trend line clearly. So from this high, and then this high, you will notice that the market hit the trend line, found resistance, went back down, but then broke higher, indicating that the trend had changed, but this did not last for longer. What happened is the market changed direction and started going down. So if I remove these prior trend lines, you will notice what was happening here. So very strong bullish momentum, and also on the lower side, the lows were getting higher and higher up to some point where the market broke towards the lower side. So since this break here, you can see the strong acceleration towards the lower side. So I am expecting that equities will remain weak. There is no reason to believe that the equities will be strong, while the American consumer is still facing challenges of high inflation. So whenever there is high inflation, people tend to pay more money towards honoring their credit card debt, among other debts. They spend more money on basic commodities such as food, education, healthcare, and all that. In that case, from their income, they are left with less money to spend on discretionary products. So when it comes to spending in the economy, generally goes down, leading to lower revenues for such companies, and this leads to lower stock valuations. So we are in a bear market that started at the beginning of the year. This market has been continuing, but the last couple of weeks have been strongly bullish, which has convinced a lot of investors that we may have entered into a bullish market, having enjoyed, let's count these, 9 straight weeks where the market was consistently pushing higher. But now from the price action of last week and this week, it seems like the prices are now headed back down. And this is still very early, considering that we could be seeing some further downward momentum. So if we could see a leg similar to this, then we would understand what I'm saying when I say that this is still very early. So this is a very small move compared to the move that we saw here. And this was stretching from the beginning of April towards the 12th of May. So a month and a half, the market was just pushing and pushing lower and lower. So if we could see something similar happening here, and the bear market continues, then the opportunity lies on the upper side. So that's what we have for New Zealand USD. It's a similar kind of case with the pound USD and also the euro USD and also the USD yen, where the dollar dominance is driving prices lower. So I just simply remove this. We focus on these and how the prices were rising the last couple of weeks. That is the New Zealand dollar gaining against the US dollar. Then you notice the break and how it performed. So the break happened somewhere mid last week. Market retested the area, kept going down, and now it seems like it's settling for a while, but maybe see some further downside. So key price levels to observe include the following. One, bottom. This bottom that we saw here, 0.60637. It's an interesting price level. So also, if the market was to go back, then perhaps the retest of the upper trend line. So somewhere around this area here. But then the strong momentum is indicative of some further strength of the dollar, pushing the New Zealand dollar lower. So that being mentioned, I'll be checking if there's any other question. If there's no other question, then we prepare to end the session. So good question from Tony. Australian dollar against the Swiss franc. I'll be checking on that. Hello, Susan. Welcome to the session. VIX 100 analysis. We'll be checking on that. Thank you. Thank you guys for your responses. So the first question is on AUDCHF, or the Australian dollar traded against the Swiss franc. Quite a noisy pair here. Out of activity happening here. So by first sight, I think it's a sideways momentum. It doesn't seem to have a very strong sense of direction or a very strong trend. So first of all, I acknowledge that this is commonly described as a range. So in a ranging market, the general price movement is sideways. So in this case, I would say that the Australian dollar and the Swiss franc are just trading sideways. So for 1, 2, 3, 4, 5, 6, 7, this being the 8th week, the market is just moving sideways. So what happens if a market is trading sideways? You have two options. You can decide to trade within the range or outside the range. So trading outside the range means that you trade when the market breaks outside the range. So if it breaks to the upper side, then you probably look for bullish positions. If it breaks to the lower side, you probably look for bearish positions. So besides this, then it's all about trading inside. And trading inside the range is very simple. We just wait for the price to get to the extreme price levels. That is either the resistance or the support. So if the market hits the resistance, then what you're looking for is a rejection of higher prices. So if such happens, then it could present a trading opportunity. So the clearest one seems like this one, a pin bar, small body, long tail to the upper side, indicating a strong rejection of higher prices. We also have another pin bar that happened sometime back here. So we also have another one happening here. So such kind of patterns might be very interesting in triggering a trade in the opposite direction. So right after the pin bar, go for a short trade, target lower prices. After the pin bar, short trade towards the lower side. After the pin bar, short trade. So now that we are somewhere midway on the upper side, seems like it's not a good time to look for a position. But then if the price approaches 0.67240, then that's an interesting area to be focusing on that particular market. So last three, as for gold, it's a similar thing. So sometimes these trend lines, I don't know how they change. So you leave a trend line at one point, you check on the trend line again, and it seems to have changed position. So this is what we are seeing in gold. So a very strong bullish momentum that was very similar with what we saw with the S&P 500. Markets gets to the upper trend line, plays around here, breaks for a while, and then moves in the opposite direction. So it's a book pattern that we've been observing. Here we had a pattern that seems to look like a rising wedge. So our rising wedge was somewhere here. So just try and be as accurate as possible. So the highs were getting higher, lows were getting higher, but the two trend lines were approaching each other. Eventually, the market broke the trend line towards the lower side. So you can already see a very strong momentum here, right after the break. So this could have been a very strong signal telling you that the market is now bearish, and now we are looking at a market that is potentially headed lower. So today, seems like the markets are being resilient and trading in the opposite direction. So we saw a pin bar happening in EURUSD, a pin bar in the pound USD. Right here, this was the pin bar indicating some strength in the pound. So for EURUSD, I believe this was the pin bar somewhere around here. But now what we are observing in gold is a pin bar on the 1 hour chart. In 4 hour chart doesn't seem to qualify like a pin bar. So we could see some breather happening in the market. So if you take a smaller time frame, and this is the 15 minutes on gold, then you can clearly visualize the breather, which comes in form of what looks like a flag. So in a flag pattern, you will notice that the market is following some path here, where a break outside these two trend lines would indicate the next direction of gold. So let's say a break towards the upper side. If let's say gold breaks this area here, then a bullish position. And also if gold was to go back down and then break this area here, then potentially a bearish position. So from the 1 hour chart, this is how it looks like. Very strong momentum consolidation for a while, and then perhaps a continuation of the original trend. So key focus here is on the US dollar index. So if it manages to break this level, then well and good. This reversal is also very interesting, because if the 4 hour candlestick manages to close lower, to indicate a rejection of higher prices on the dollar index. So a weaker dollar would mean the pound is reversing, it would mean the yen is reversing, and all these other pairs. So you just have to follow the dollar index, see how it closes here, and potentially this will give you a direction on all these other pairs. That is the dollar denominated pairs. So lastly, we look at the volatility index, or the CBOE volatility index. Has been going down for quite a period now. Don't know whether this is updated, so I'm just trying to make sure it's the right one. So strong bearish momentum. So it seems like this is the path that these or the weeks has been following. So good one. So potentially a reversal somewhere around here along the lower trend line. So a nice area to be watching the volatility index will be on this bottom. So perhaps some further pressure towards the upper side, expecting higher volatility on the S&P 500 in the near term. So potentially we are bouncing from the lower trend line. Not sure. I will check this chart in a while. So I'm not sure it's the real time price or not. 24.4775. I would have to confirm this with another chart. All right. So if there's no other question, I'd like to thank everyone. Thank you for taking your time to listen in, and I hope to see you guys on the next session. So remember, our most interesting trading idea happens on the pin bars on the 4 hour chart. That's on the pound USD. The pin bar on the 1 hour chart on gold. This is the strong candlestick indicating a rejection. So following up on the next candlestick might give us a trading idea, and also the US oil. So US oil seems to be strongly headed towards 94.256, and this was a high of the last 2 weeks. Now, if we happen to break the 94.256, then the next target is 100.793. It seems to be a major resistance. A major resistance trend line has already been broken, so perhaps some further upside in oil might be a good relief in the markets. So thank you very much, guys. See you on the next session. Uh, 4:45. Maybe not. Trying to shorten these sessions as much as I can. I know it's Tuesday, it's a busy hour of the day. So if it's too long, then probably not too productive for everyone.